My name is Kevin Martini, and I'm not just the host of the Martini Mortgage Podcast. I'm also the branch manager and senior mortgage strategist with the Martini Mortgage Group at Benchmark Mortgage. This episode marks a milestone. It is episode 100. This milestone comes during a monumental period of time in Raleigh, in North Carolina, in the U.S., and the entire world. I'm calling this episode, What is Going On That You Need to Know.
This is the Martini Mortgage Podcast with Kevin Martini.
Thank you for tuning in and welcome to episode 100 of the Martini Mortgage Podcast. Let me dive right in and start shaking up this martini cocktail by answering a question that is top of mind for many people right now. When will there be economic recovery? For the record, I have no idea when the economy is going to recover, so I have to lean on what the major financial institutions are saying. If we look at GDP in 2020, the advanced estimates of Q1 was negative 4.8%. Holy cow. Here is something that is going to blow your mind based on the data from the Commerce Department. 47% of the 4.8% decline in Q1 of 2020 was due to the healthcare sector because, in part, hospitals temporarily had to stop all elective and/or non-emergency surgeries. Okay, let me get back to what the major financial institutions are saying. But first, who are they? I looked at the data from Goldman Sachs, JP Morgan, Morgan Stanley, and Wells Fargo. All four of these institutions see a decline in GDP in the second quarter of 2020. That should not be any surprise. But 3 out of 4 see positive GDP growth in the third quarter of 2020, and 4 out of 4 see positive GDP in the fourth quarter of 2020. These four major financial institutions are calling for a V-shaped recovery, and I truly believe they are 100% correct. Here is a hashtag Kevin Martini Live talking point. You've heard in some talk about a U-shaped recovery in the news. This technically cannot happen since there has not been a gradual decline in economic activity. This thought that we're going to have a straight down and stay flat, kind of like the letter L, is unrealistic. Oh, by the way, I have found no one that even thinks this is possible. I am in the V-shaped recovery camp, and there are better odds of a leprechaun riding a unicorn to hand me a winning lottery ticket than there being an L-shaped recovery. There is no question Q1 was bad, and Q2 might be worse. However, as businesses come back online, Q3 and Q4 should turn that frown around and we'll get closer to a normal pattern. I know what you are thinking. Kevin Martini, how can we resume a normal pattern with all these job losses? I get it. There is no question that good people are hurting right now with so many people being out of work. At the end of February 2020, there was 5.8 million people unemployed. At the end of April 2020, there was 23.1 million people unemployed. Did you know that basically 1 out of 3 people unemployed today, well, 37.6% to be exact, are from the restaurant and spirits industry? It is my opinion that this industry is not going to disappear. These jobs will come back, in my opinion. Let me give you another example of who is unemployed. Childcare workers are unemployed. Based on the most recent data, 5.8% of the unemployed are childcare workers. Now, listen, we have to send the kiddos to daycare again, and those jobs will come back. It is my opinion we have just hit the pause button, and soon we will be back and we can hit the play button. It will seem like we're going slow because we're going so fast, but I think we're going to get back up to speed before you know it. Here is my take based on the data, and it's critical to share that the numbers are not pretty, but they do show me that the worst may be in the rearview mirror. The peak of the weekly jobless claims were at the end of March 2020, and that is where 6.9 million people filed for unemployment. Every week in April 2020, and based on the most recent data at the time of this recording that was available, there has been a decline in weekly unemployment filings. Let me recap. The people that are being unemployed is going down week over week, and that is good news in my opinion. Again, I am not saying that it is good that people are unemployed. I am saying that this weekly decline is showing that there's a light at the end of the tunnel, and it's not the light of a train coming at us. Before the pandemic, it was not uncommon to see multiple offers for the same house. And during the pandemic, yes, like right now, it is not uncommon to see multiple offers for the same house. And post-pandemic, it will not be uncommon to see multiple offers for the same house. Real estate has not shut down, and in fact, one could make an argument it is green and growing. Yes, people are buying right now, and they are getting mortgages too. Yes, in March 2020, there was a decline in showing for real estate. However, in the beginning of April, it leveled off. And since then, showings have been on the rise. Listen, COVID-19 is accelerating the future in real estate and also in the mortgage business too. Check this out. It's my opinion that one should never push a button and make the largest purchase of their life or secure the largest debt of their life either by pushing a button. There is no question that a professional real estate agent is needed to be your Sherpa, and so is a mortgage strategist. The most successful real estate agents have and continue to use technology to help the families they serve. Now, the Martini Mortgage Group at Benchmark Mortgage has always embraced technology with a mobile-friendly and secure online application, virtual mortgage planning sessions before and after the transaction, and with hybrid e-closings. But not everyone in the real estate in the mortgage arena are evolving like we have or like my partners in real estate have. It is my thought that COVID-19 is telling the real estate community to meet the consumer where they want to be met. And I have found that most consumers want the ease that technology offers, but they also want and need the trusted, customized advice. Let me do a shameless plug. My mortgage practice has been created by understanding the needs and wants of the families I serve, and then provide that family with certainty with a frictionless process. If you or someone you care about needs or wants a mortgage, give the Martini Mortgage Group at Benchmark Mortgage a call, 919-238-4934. Is buying a house right for you? This is another question I cannot answer because even though I've been in the financial services since the late 80s and exclusively in the mortgage arena since 2006 in North Carolina, I have yet to find two families that have the exact same needs, the exact same wants, or the exact same situation. Here's what I do know. There was a time to rent, and that time is not now. In 1988, the median asking rent based on the census data was $343. At the end of 2019, it was $1,041. Historically, rents keep going up, and when one has a fixed rate mortgage, they are able to lock in their housing costs. And right now, mortgage rates are not just on sale, they're darn right cheap. Based on the data from Freddie Mac at the end of April 2020, the 30-year fixed rate mortgage was 3.23%. This is a record low for a stat that has been tracked since the early 90s. Low home loan rates amplify one's buying power. In other words, it allows you to buy more for the same payment versus a higher payment, and maybe even with a lesser home. Again, I do not know if owning is right for you, but I do know not exploring your options is wrong. With an open heart, we all need to have a roof over our head. I truly believe it is better to own that roof than rent it. The first step to home ownership as a first-time home buyer, and even as a first step for a homeowner that is thinking of upgrading because their home is not meeting their needs of their family, is the mortgage. It should always be home loan first, then go find your home. There is nothing worse than falling in love with a place that is outside your budget. Well, there is something worse. Falling in love with a home that you cannot afford. Let me wrap this 100th episode of the Martini Mortgage Podcast up. Things are going to be okay. And in fact, real estate has really not received a blemish during the pandemic. 4 out of 4 major financial institutions believe that we will be on the upside of a V-shaped recovery by the fourth quarter of 2020. Right now, mortgage rates are not just at historic levels, they are downright epic. As an added bonus, homes are available for sale, and the money to buy that home is available and on sale. If you have questions about what I talked about, I invite you to give me a call. My name is Kevin Martini, and my number is 919-238-4934. Also, if you're on the Instagram, check me out by searching at Kevin Martini Live or search the hashtag Kevin Martini Live. Thank you for taking the time to tune in. And please share this episode with someone you think might benefit. Be safe. Wishing you health, peace, and blessings.
The Martini Mortgage Group makes real estate dreams a reality with trusted advice in a stress-free environment with great rates and on-time closings while providing a world-class experience. If you or someone you know has questions about the current mortgage rates or the current mortgage programs, please reach out to the Martini Mortgage Group at 919-238-4934. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.